Thank you very much for joining us again today. Today we're going to continue our series on multi-currency processing in Acumatica by talking about financial reporting translations. Sometimes we need to be able to produce financial reports in a currency other than our base currency. In our example, our parent company wants to see financial reports in the euro, even though our base currency is the US dollar. So all of our financial information in the general ledger is in US dollar, but we need to produce financial reports in the euro. So how do we do that? Well, let's take a look at our agenda. So the first thing we need to do is enable the functionality that allows for the translation of financial statements. If that's not enabled, we can't do any of this processing. Once we've enabled the option to do the translation, we can set up translation gain and loss accounts, and we'll talk about how those accounts might get posted to a little later. Then we're going to create the translation ledger, and then we're going to revisit the currency rate types that we've talked about before. And once we have the rate types, we'll talk about the currency rates, and then we'll talk about creating the translation definition. So let's go ahead and get started on these steps. So here I am in Acumatica. I'm going to go to System Management and Enable Disable Features. And the feature that we're looking for here is under the section called Advanced Financials, which allows us to use translation of financial statements. So this has already been enabled in my sample company here, but if you needed to enable this, you would hit the Modify button, check the box, and then push the Enable button to save your changes. The next thing we're going to look at is how to enter the translation gain and loss accounts. So back in Acumatica now, we're going to go to Currency Management and Currency Management Preferences. And on the Preferences screen, you can see here that we have a space for the translation gain account and the translation loss account. So we're going to just fill those in with the GL account numbers. And you can notice here in this particular sample company that the accounts are the same account. The next thing we're going to do is create the translation ledger. Now this is the ledger that's going to be used for the financial reporting. So we're going to run over to Finance, and we're going to open up our ledgers. And as you can see here, I've already created another ledger called Eurotrans for translations. So let's go ahead and open that up, and you can see the settings involved. So when you set this up, you create a ledger ID, be anything you want. I called it Eurotrans. Gave it a description that says reporting ledger for translations to euros. Now, this is not an actual or a budget ledger, so this might be the kind of ledger that you haven't used in the past. This is simply for reporting, so the type of ledger is called a reporting ledger. It doesn't actually hold any data. And then our currency in this ledger is going to be the euro. We'll go ahead and add this to my company without branches and save that. Now that we've created our translation ledger, let's go ahead and look at our currency rate type. So let's go back to Currency Management and look at our currency rate types. So when we set up our rate types in the past, the only rate type that we had set up was the spot rate. But now we've added a couple of other rate types. One of these is called the average or monthly average rate. So this is going to hold the average exchange rate between the US dollar and the euro for the month. So we're going to look at the historical data and average that information. But I've also created one called the historical rate. Now the historical rate is going to be used to track the actual exchange rate that was used at the time a principal made a contribution to the company. We want to make sure that that translates to the euro at the same exchange rate that was used at the time this person made the contribution. So that's why we created another rate type. Now that we have our rate type, the next thing to do is to set up our rates. So let's go back into Currency Management and go to Currency Rates. I'm going to go ahead and choose December 31st, 2013, and we'll look at the effective currency rates here for the euro. So as you can see here on 12/31, my spot rate conversion is 0.933, but on 12/5, we had set up this historical rate of an exchange rate of 0.7966, which is still effective on 12/31. Remember, these rates are effective based on the last date that there was a record. So this will remain in effect for that combination of the currency and the rate type until there's a new record that defines a different rate. And our average rate for December 2013 was 0.864. Now I also have one set up for January, and you can see these rates are a little different. So 0.867 for the average. The historical rate is still based on the value that was on 12/5 of 0.7966, but there was a new rate for the spot as of 1/31/2014. So you'll see that in a moment, this is going to come into play as we do our translations, because we're going to specify what the effective date is when we do the translation, and it's going to use these currency rates. So back on our agenda, we've now have our rate types and a currency rate. The next thing we need to do is create our translation definition. And our translation definition is going to define how the financial information is going to be converted from the US dollar to the euro. So back in currency management, I'm going to go under profiles, go to translation definition, and you can see I have this one already defined. So my translation ID is EUR. You just set these up using a translation ID. You will specify which ledger you're going to translate from. So I'm going to translate from my actual ledger. And then you define what ledger you're going to translate to. And that's my Eurotrans ledger. And I've given it a definition here of translations to euro, and it's active. So our source currency is US dollar, my destination currency is euro. Now down below, we have these rows, and this is where we're going to define how the translations occur. So our instructions for this particular part were that the assets and liability accounts would be translated using the current exchange rate. So from account 101,000 to account 280,000, we're going to use the year-to-date balance, and we're going to use that spot rate. So the spot rate is the current exchange rate. The capital account is going to be using the historical rate. So as I mentioned, one of the principals of the company made a contribution on December 5th, and we want to use the same exchange rate that was used on that particular day. So from this account to that account, which was the account that we did the contribution to, we're going to use the year-to-date balance, but we're going to use the historical rate type. Now for the rest of the accounts, our instructions are just to use the average. Now notice that for retained earnings and the income and expense accounts, we're not doing year-to-date, we're doing period-to-date. And that's because in our financial reporting, we're going to go ahead and calculate the year-to-date in the converted currency. So we don't have to take the existing amounts and convert them. So that's why we do period-to-date there. But this is just an example of using the 3 different rate types, but you don't have to. You can just use your spot rate if that's what you want to use. So now back to our agenda, we've now gone through all of these steps to allow us to do the conversion processing or the translation processing. So now how do we actually do it? So the first thing we're going to do is prepare the translation, create the translation, and then release it. So these steps are pretty straightforward. And then once we release it, we can look at the ledger. So let's start with our first step of preparing the translation. So let's go ahead and prepare our translation. So we're going to go to processes and prepare the translation. And it's just going to ask us the translation ID, the one that we'd set up, and the financial period we want to do the translation for. So we're going to do December 2013, and it's going to ask us what currency effective date we want to use, and it's going to default to the end of the same period. And now you can see here which rates that it's using. So It's using for the spot, it's using 0.933. For average, it's using 0.864. And then for historical, it's going to use 0.796. Well, our next step is just to create the translation. So to create the translation, all we do is push this button on the toolbar. And now we will see the result of the translations. So we can see that our checking account year-to-date balance, the end of December 2013, has this balance in US dollars and this balance in euros. And you can see that it's going to make the journal entries accordingly. Now, if we look at this, we can verify that our rates are correct and our translations are correct before we release it. There's also a control total to make sure that everything came out correctly. Back on our agenda, our next step is to actually release the transaction. So we verified that this is all correct. Let's go ahead and release it. And everything worked. We didn't get any errors. Back on our agenda now, let's go ahead and view our ledger. So now that it's been released, we can also drill into the batch, and we can see the general ledger postings to this ledger. So this is the ledger, and you can see all the postings. Now notice that there is a posting to the gain or loss account, and in this case, it's a credit amount. The reason that there is an amount in the gain or loss is we used different conversion rates or currency rates throughout the translation. So we had some accounts where we used the spot rate, other accounts we used the average rate, and other accounts we used the capital account, we use the historical rate. Because all those rates are different, to be in balance, we have to have a posting to the gain or loss account. So now that this ledger exists, we can look at it in the general ledger. So we can go to Finance, Account Summary, and we can look at the Eurotrans ledger, and we can see the summary balance of all of the accounts, or we can look at the detail or whatever we want to look at. Once these balances are in this particular ledger, then you can go produce financial statements. If you don't know about financial reporting in Acumatica, as you create your financial statements, you get to choose the ledger that you're pulling the data from. So when we are printing financial statements, income statements, balance sheets in the US dollar, we would just pull from the actual ledger. When we're producing the financial statements for the euro, we would just pull from the Eurotrans ledger. So once again, to review our steps, we enabled the translation of financial statements as an option. We entered the translation gain or loss accounts. We had to create that translation ledger that will be used for our financial reports. In our example, we created a couple of other rate types besides spot, and we assigned rates to those rate types. And then we created a translation definition so that it knows what rate to use as it's doing the translations. Once we did all that, we went into the screen to prepare the translation. We pushed the button on the toolbar to create the translation, and then we released it. Once it's been released, we can view the ledger and/or go write our financial reports. Thank you for joining us today. If you're not a subscriber to our channel, please consider doing so. You can also find us on LinkedIn. You can contact us at NIMS & Associates, at ERP@nimsassociates.com, or the telephone number that's listed there.